Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you?
I'm well, thank you.
Great. So, I never timed the market perfect, but fortunately, I was able to reallocate a good chunk of my 401k and offload it in some conservative areas before the drop in February.
Right.
And so now I'm trying to get in this, at least for that, right? The 401k, the IRA stuff. I'm trying to get a state of mind where you just forget about trying to time the market and maybe poke around where you think you could be with kind of near the bottom, but maybe not at the very bottom. And as we're here, I kind of feel like the market, for one reason or another, could either go up 1,000 or down 1,000. And when I get into that area, and then I mix that in with the fact that in your trader's corner this morning, I think you went long a position, right, a full position.
Yes.
Is this one of those areas where maybe it is time to start throwing some in, a chunk in, maybe a third into the 401k again?
So let me just talk about that, because as I'm looking at it, and as I did more work, I didn't have all that much time over the weekend to actually post charts, but I did quite a bit of looking at the charts. And what my conclusion was is that my assessment from a couple of weeks ago has to still stand, and that is that the Qs have made I can only call it a significant short to intermediate, not a major, but a short to intermediate term top from everything that I'm looking at. The only way that would change that is the Index 100, the QQQ series, the power shares, and that takes in the Index 100 top stocks. It says to me that it confirms for me, especially with the semiconductor index acting so poorly, especially after Thursday's tremendous move after the market closed, with the anticipation that Friday would just be a blowout session. In fact, it was the exact opposite. I'm of the opinion now that we have to make some kind of a low, and it's going to, we needed to get through the previous week, not last week, the week before that, which I had said was significant for three reasons. One is regarding interest rates starting to break out, not breaking out in monthly charts, but in the daily and the weekly charts. They really were starting to move very strongly. We haven't seen a move like that with the implications like that for a long time, even though in some cases like the 30-year, we've been there before. But that 5-year rate of increase in the 10-year, that was significant. Number two is the dollar and other currencies, the strength of the dollar continuing into last week, with the yields continuing into last week until Friday, Thursday, Friday, where yields pulled back some, but the dollar managed to hold very nicely, and today the dollar is acting well. Together with the third aspect, and that is that the semiconductors had led us up and down for the last at least year and a half to 2 years, and now they're starting to fail. And it says to me that the cycle in the industry, at least now, I have a good friend who's in the industry and we talk about it, but I cannot rely on what he says because he looks at it as an insider. And I've noticed over the years that it's not the accuracy with which he tries to make his predictions is based on other factors, and very often it doesn't correlate exactly to the semiconductor index because there's so many different sectors, but the semis are acting very weak, and it seems to me there's a good chance that their cycle, at least for now, looks like it's running out of energy. So with that in mind, it's the rotation into other areas. The retail sector in certain sectors within the sector, that is certain stocks within the sector, are acting very nicely. Look at Macy's. So I think you're absolutely correct. You timed it very well. I think that we need to be looking at how significant is the very sharp rally. Say in a Macy's going from 17% just 6 or so months ago, 17.41 up to 31.55 right now. That's a huge percentage, but how significant is it when the stock was 173.61? It's going, the 2 weeks previous, were telling me about a whole bunch of things that I was looking at, as well as Dave White's oscillator index, which has really been proving a tremendous boon, giving us a lot of knowledge about certain things. And it's saying to me that we've got to be very careful. And you said 1,000 points. I'm not so sure. And now, so I can go to the nitty-gritties of what your question is. I think for now we're stuck in a range. Maybe Wednesday the Fed does something and you can start to see a bigger move. But I would not be surprised if that we're stuck in a range of maybe 24,300 on the down right now, maybe 300, maybe 400 on the upside, and maybe it's only 300 or 400 on the downside. It is what happens if the weekly chart for 2 weeks in a row breaks above those conditions. So I'll just make it very easy. In the S&P, it'll be, what if the S&P is able to close above 27.15? What was the high on that little doji candle there? 27.17. So if the S&P is able to close above 27.20 for 2 weeks in a row, in the entire month, we give it the whole month of May. If it's able to do that, I'm going to be very impressed and say that the downside is now pretty limited and the rotations must be taking effect because we're going to see which sectors are coming alive again. Will it be retail? I'm not so sure. Has the XLE, the energy sector, run its course to the upside? So I think this particular week, going into the Friday close, a week from Friday, that's next week, the entire next week of what will be the date? The week of the 9th or 10th?
Basil, are you saying that when you say it timed it well, you mean that this is a good time to maybe dip in back into
no,
the 401k
I mean I think you timed your exit very well. Now, in terms of looking at markets, you see, I don't want one stock like maybe it's McDonald's. I could do it now. I don't want to take the time. But I think McDonald's. Let me just see MCD. I think it had a big move this morning. Yeah, look at that. Big gap up 8 points at 166. That alone could really help the Dow, which it's doing. So what I want to do is I'm going to say to you, have patience. I still think it's going to be a sudden move, a breakout move of the VIX index. And the VIX right now is at 1607. It's up just a little bit, up 66 cents. It's going to be a move in the VIX index that takes you to the 27 to 31 area, and we just have patience for when that's going to happen. That's going to be the next. Can you hold on?
Yeah, I can. Thank you. Okay.
We'll come back and I'll finish that sentence as soon as we return. Does up 13.75. So then this is what I'm looking at. When I say, now I don't, you might have listened, but about, I think it's possibly now 3 weeks ago, I had a caller and wanted to know, in the long term, what would I be thinking about, say, the Dow, and would it be an opportunity to pull back? Would it be an opportunity to position himself long, looking out? And what I said is, because he's a very long-term investor, he could start a very small position in the Dow. I wouldn't be surprised if the Dow is somewhere around where we are right now. And I said, don't expect very much, but it's a starter position. And this way, because I'm anticipating, even with a big pullback, that we will be making new all-time highs, that this is just a long-term position, that's fine. But in your particular instance, because now you're in cash, you shouldn't feel an urgency to pile in to do anything. What I'm going to suggest to you is, let's just give this another week or two. Let's just see how, look, the PPH, which is the Van Eck Vector Pharmaceutical ETF, just kind of stubbornly down at the bottom, made an A formation in the weekly chart, trading 57.15. Nothing much to see here, but it has held very well. And the monthly chart has had a steady move to the upside. The last move was a little bit deep, but I'm saying to myself, if fund managers start to rotate to different sectors, would they go, if whatever the tax advantage, whatever it is there going to be Will there be a slant bias to the upside in something like the pharmaceuticals? The biotechs have had for ages they've been correcting. Will they find favor? Well, I'm prepared to give them time because all of them have to hold key support levels. In the case of the IBB, it's really the 100 key support. It's at 104.03. So I think you've got time. What if we're wrong? What if all of a sudden in 2 weeks' time we're looking at the market and the IBB is at 110, up 6 points from here? The IYT, which is the transportation index, instead of being towards the lows of all this, or in the middle of this trading band, has broken out from the 190 level up into the 196. Well, that's going to be a very positive thing. And then you can say, all right, I've missed some percentage, but I'm looking at higher highs and higher lows. The trend appears at that particular point to say it's favoring the upside. And it's exactly the same on the downside. What if in the range, we're stuck in the range and it starts to break down? Well, we know the levels to look at, the recent bases or the 200-period moving average support. I think you've got time. There's no need to rush into anything.
The two things, Basil, that kind of were my flags to potentially get back in. One is when you pulled the trigger this morning, I wasn't quite sure if that was a short-term trade type philosophy or longer-term. And then number two, if you look at the weekly and the DIA, it looks like it's higher lows over the last couple of weeks, and it looks like there's two, potential points of a what do you call it? A trend.
Yeah, like pivot points, major high and low. Yes.
Yeah, to create a horizontal line of whatever, right?
In the 248s back about 3 weeks ago. If it breaks above that, that'll start another leg to the upside. And if it just takes that last week's low.
Do you go by 2 points or do you need 3 points? That was another question along because it all kind of goes together, I guess, right?
I need weeks. I want time. You could look. This is fascinating. If you look at my chart right here, this is the weekly chart. The diamonds, the Dow diamonds, basically the Dow itself. Have a look at this. It makes a green candle at the all-time high at 265.93 back in the, that was January the 26th. Then there's two red candles. Then there are two green candles. Then there's a red candle. Then there's a big green candle. Big red candle, second red candle, a green candle. Look how it's alternating. Red, green, red. And now there are a couple of red candles, but they're really holding quite nicely in the upper level. So you can see that there's no real trend, because a trend would say you've got at least three. This is a trend. If you're looking to the right on the monthly chart, that, all those green candles, that's a trend. So as long as I'm looking at this and I'm not looking at a trend, I thought I'd said it, I'm looking at it now, and I think I didn't say it. I said it in my write-up of the analysis of the Dow. This is just a trend, playing it for a bounce. And that's kind of what we've got. Now, what's really important about this is that without the news event at whatever time it was it about an hour ago? No, it was less, half an hour ago, where the market suddenly started to pull back because the Dow was up 100, and even at noon, I think it was up about 100 and something, and then it suddenly started to pull back sharply. So given that, the speed with which it's pulled back, I'm just saying, I don't think this is different, even though it's a very long term, and I know that you are willing to take a position knowing that there could be 5 or 7% pullback because we're looking at a 14 or an 18% rally. I don't see that right now. I think the risk is too great. So I'm saying to you, let's call it, just for argument's sake, let's call it your IRA type portfolio. I wouldn't be playing games right now. I'd be waiting. I'd have patience. I think there's going to be. Look at this Triple M. This Triple M should not be doing this. Triple M just disappeared off my screen. Triple M is up 53 cents after a smash to the downside. This is an ugly candle. UTX, United Technologies. This is ugly action. So you've got time.
Well, and then we got somewhat of a seasonality coming up for more or less that favors the bears. I know seasonality can be a little bit misleading, but
into May, right.
Yeah.
Now I have a tough time with seasonality because sometimes you get the seasonality thing, but it actually starts a slightly different time and it comes from lower down. So I try to use seasonality just to say that the tide should be favoring, and then whatever it is. But when you're in a sideways range, I think what you have to do is you have to be very specific and say, I'm looking at certain stocks within certain areas. I'm going to trade them. And if anything holds and really starts to move, for instance, when we got long the dollar, there was no way that I could be assured that the dollar was going to break above the candle of the week of the 2nd of March, the high of 90.93. Everything was improving. And then you got a pretty ugly middle of April where the price went down to 89.23. And then out of the blue, you got those 4 very strong green stocks to the left side, high of 90.93. It soars intraday, and then boom, it goes up again towards the 200-period moving average. So that's what I'm saying to you, that within the sectors, as soon as I start to see speed that accomplishes something that it hasn't done before, that's why I'm saying it needs to hold in the weekly chart, whatever we're looking at least 2 weeks on the upside of the breakout or 2 weeks on the downside. I think you've got
Basil,
time.
thank you very much.
Thank you, Ben. Good question. Thank you very much for calling. We'll be back, folks. A lot of questions came in. Basil 22. We'll be right back.